Hey, let's bring in Phil Streible joining us this morning, Chief Market Strategist at Blue Line Futures, to help us break it down, take a deeper dive into some of the headlines. Phil, good to have you with us this Tuesday. Let's begin with markets. We've got the Russell, you've got small caps and the survival still in the show, as I said.
Total breakout to the upside. I mean, 4 straight relentless days up. I think traders are still caught off sides on it, but the Russell looks like it has a lot more room to go if you back the chart up on it. I mean, we could hit this 2,200, 2,300, 2,400. Who knows? I mean, markets could continue to move higher on that type of news. After Jerome Powell's speech, the first thing I always do is I look at that CME's Fed Watch tool. And if you look at, there's not even an expectation for him to keep rates unchanged. So 87.6% chance they cut 25 basis points. You got a 12.1% chance they cut 50 basis points and a 0.4% chance 75 basis points. So I think a lot hinges on, these numbers like retail sales, initial claims coming out. We're going to really want to monitor the consumer. And if the consumer continues to break down at a faster pace, you could see those higher expectations for the bigger cuts come in.
Phil, you're talking about the September meeting, right, in terms of the CME Fed Watch tool, as far as no real expectations. They're not going to cut September. But talk to me, because I'm starting to hear calls for why wait till September? Why not go ahead at the end of July?
I know. I think Goldman Sachs put out some note on that as well. But, the expectations for it are only about an 8.8% chance that, that they'll make that cut in July. And a lot of the things that, people got to ask themselves, the traders, I think, is that if they do only cut what time, how does it affect the markets? How many interest rate cuts are priced into a lot of assets? Something like the gold market, for instance, I mean, we looked at last December, it was 6 interest rate cuts were expected. Now it's like realistically, I think maybe we get 2 this year, September and December. But I don't know about a 50 basis point. I think it's a bit optimistic.
That was my next question. I'm kind of wondering, in order to see this trajectory to the upside in terms of small caps continue, do we need to see yields continue lower, right? This has been a big part of it, obviously. The 10-year, as I look to 4.168 in the overnight session. I mean, if yields start to reverse, then we could see maybe the Russell kind of get back into that pattern where it's been lagging.
Yeah, I mean, it would be you would start to see like a 40, 50 point drop most likely on the Russell. So if someone believed that, they could look at, there's end of month Russell puts. There's also a micro Russell
great opportunity
contract.
Potentially, right?
So yeah, there's a lot of different ways to play it here. So I mean, these markets have been a lot. It seems like the volatility is non-existent, and then it comes all in at once. So you get these just massive moves. I mean, look at even Bitcoin, $5,000 yesterday, $6,000, whatever it was. Gold's getting these big moves too. But we think there's a great opportunity in silver and some of the other foreign currencies, and also oil selling off today. That could present itself too.
Yeah, watching oil come off. Interestingly enough, oil's come off a bit with the dollar, maybe tied to some of that weaker than expected China that we saw to begin the week. We're going to talk about that a little bit later and kind of tie it into copper in just a few minutes. But let's continue the focus here on the indices, but get a little bit more to the individual stocks that make up these names that we watch: the S&Ps, the Nasdaq, the Dow, the Russell. And right now, it seems the focus continues to be on the banks, without getting into the 2 names specifically that we've heard from this morning. How do you feel in terms of the tone being set from financials so far?
Well, the financials look really good. I mean, they're starting to push up to the upside. We saw like Bank of America, Morgan Stanley; those had done quite well. So I mean, this rally really seems to be broadening out, and that's where you get the strength behind it, and you get all the indices moving up. I would say the Nasdaq is still by far the most volatile here, and the Dow Jones, I think, is getting a little bit of ahead itself. So we'll see if that has any kind of breakdown as well. But S&P and the Russell look really good.
BAC, to your point, $43, a new high for the year. Talk to me about, as we look beyond the banks, some of the other names you're going to be watching. Obviously, the NVIDIAs, the big tech names that start to report over the next week or so.
Oh yeah, we always watch those. I mean, that's where you got it. That's where you've had to have been in order to create that alpha and try and outperform your peers. So we'll want to continue to monitor those at all times. If we get any kind of substantial pullback on tech stocks, I would expect them to continue to be bought until we get some kind of serious breakdown, that something that dramatically changes in the market or market structure, or even technically. But it's just not happening yet.
Phil, you mentioned some of the other products you're looking at in terms of silver. You did mention Bitcoin, which is, speaking of, had a bit of a revival itself. If we could just take a look at this chart, recently down to that $53,000 level. What was that low that we saw? It was 53,635 back on the 5th of July, I think it was. And we talked about how if the bulls are still in charge, it's an area where they're going to step up. It looks like they did. What do you tie this to? Is it, I'm hearing, possibly tied to some of the recent political developments? Also, again, maybe just this technical revival?
JD Vance is, it's been noted that his portfolio has, a sizable stake in Bitcoin. He's also got gold, the stock indices as well. It was the only holding that we saw that was interesting was Walmart as far as his was concerned. But Bitcoin breaking back out to the upside. It was a bit oversold. The negativity
Agreed.
was there, pessimism. Germany was liquidating. You get a lot of people with the Mt.
Gox story, right?
Yeah, you get when that was a hack, Bitcoin was only a few $100s. Now all of a sudden you get your coins back and it's $60,000. Of course, that's like
you might let load some. Yeah,
100%. So, but we should consolidate in this 62.5 to 65,000 range, and then we could see from here if we can continue to move up. I think silver, it's got one of the best opportunities out there. The ETF investors haven't been there. If you look at Q2 2022, it was 950 million ounces in ETF holdings. Now we're only about 800 million. So where have those people gone, and will it take that breakout in gold to all-time highs to bring those people back into the market? The other thing to watch is, solar demand. We were only having about 60 to 100 million ounces in demand since 2015 to 2020, and then it seems like the dynamics changed. Green Energy Initiative, and this year we expect 232 million ounces in solar demand. So really outstripping the supply side. Demand's increasing, which makes a setup for a great perfect storm to the upside.
I like the silver chart. This is setting up potentially for a nice rip higher here and retest that $33 level. We could just pull it up real quick. A very similar pattern in many ways in terms of what we just looked at with Bitcoin, right? The recent test of the lower extreme that failed down below that $29 level. And through this middle of the range that we've been in basically since the beginning of May, as you build momentum, you open up a door for a retest of 32, 33, that high that we saw back in, looks like on the 20th of May. All right. Lastly, data here today, Phil. We've got retail sales again. Some other numbers. Looks like a housing data point. Where's your focus?
Yeah, retail sales. That's the biggest one. And the expectations a couple of days ago were for negative 0.2%. Now I saw one of the latest ones, negative 0.3. So they're getting more and more pessimistic on the consumer. So I don't know. I've had this shirt since last year, so I'm not buying any retail sales.
You and me both. And it's too hot to go out shopping right now. So Phil, appreciate you joining us here and sharing part of your Tuesday morning with us on the Schwab Network. Phil Streible, ladies and gentlemen, chief market strategist at Blue Line Futures.